Joining us right now is Dan Levy, the senior equity analyst at Barclays. Dan, hearing all of that, what's your reaction?
Thank you, Becky and Andrew, for having me. Yeah, I would agree with much of what Phil is saying here. We are seeing a relative pivot to hybrid. And really what this is it's a function of two things. One is we are seeing some challenges in getting that next wave of market acceptance of EVs. We got the early adopters, but really pivoting to the early majority, that's what's proving to be a little more of a challenge, addressing those pain points like charging, range anxiety, et cetera. The other piece of this is automakers are struggling with the cost and with challenges on how much they can cut price. This is proving to be a challenging economic case for them on pure battery electric vehicles. And so that's why you're seeing maybe a relative de-emphasis of BEVs. Now, I would say BEVs are still very much part of the roadmap. You just had EPA regulations that were extended through 2032, some revisions that still require by 2030 over half of new car sales to be electric, the vast majority of which are going to be battery electric. So battery electric is still the main part of the EV roadmap, but it's a relative de-emphasis and a focus on hybrids.
Do you think those standards stand if there's a different administration that comes in?
No, they will be revised, but there will be a time process to revise those standards. And even if they are softened, BEVs are still going to be a part of the roadmap. Remember, automakers have sunk a lot of investment. These are still, part of the roadmap, but you're just going to see a longer tail of ice and a greater emphasis on hybrids to meet standards.
You've got equal ratings on Tesla and Rivian, overweight for GM and Ford. Why the overweight ratings?
Ford and GM are benefiting from a couple of things. One is we are seeing, for as much as the concerns of peak pricing in the U.S. in the new car cycle, we are still seeing that strength and resiliency. It's an overall very healthy market, even if there are signs of normalization. And you combine that with a relative de-emphasis on the EV push, allowing them, and specifically GM, to allocate more toward cash return to shareholders, specifically share buybacks. That makes GM especially more attractive. As for Tesla and Rivian, look, we are in an EV winter, right? And that incremental demand is proving challenging. Rivian has a number of cost challenges, and they're going to need some capital raises. They're facing demand challenges. And you just saw with Tesla, we just got 1Q deliveries that disappointed even, the bearish expectations we were seeing. And there is a big piece of that shows demand weakness at play.